Welcome to another episode of Tracxn for Investment Bankers. So today I'm very excited to welcome Mr. Nirvikar Jain to today's episode. So he's the founder of Silicon Valley-based Baytech Partners and a distinguished tech M&A banker with extensive experience guiding visionary companies through growth, capital raise, and successful exits. Over the course of his career, he has held leadership roles at global institutions like Suzuki Motors, ICICI Bank, Citibank, Bank of America, National Australia Bank, and First Abu Dhabi Bank, where he served as India's CEO. He's also a co-author of the MIT Press book, The Economics of Fintech, contributing his expertise to one of the most authoritative works in the field. We are thrilled to have him with us to share his insights and expertise with all our viewers. So welcome to the show, Mr. Nirvikar.
Thanks, Narayan. It's my pleasure, and I'm also excited to be on this show. So thank you so much for inviting me.
So I've prepared certain questions so that it will be like a Q&A round, and you can share your thoughts on that. So first, I would like to ask you a very basic question. So it's a long career you are having. Can you just walk us through your background and the key milestones that shaped your approach to advising founders and CEOs today?
That's a really great question, and I love to talk about my background. I have had, as you said, a very long career across sectors. So I started my career doing strategy for Suzuki Motors way back when I graduated from XLRI, and then started a long career with global banks where I worked with some of the largest banks in the world, including Citi, Bank of America, National Australia Bank, and ICICI Bank, and finally First Abu Dhabi Bank, where I set up their India business as country CEO and built that into the most profitable global business. And in between, I've also had, I've always had an interest in technology. So I've kept jumping off from my corporate roles to join startups or do my own startup. So that was always there. And then I think First Abu Dhabi Bank is something that I consider as a serious milestone, where I really enjoyed building the bank into a very serious and large entity in India. And then, my interest for technology and startups and venture capital got me to US, where I came to Stanford as a Sloan Fellow, and I had some amazing time learning, the ropes for an existence or the next life in the startup technology ecosystem. Since then, I have been in the Silicon Valley. I've done operating roles. I've worked as a CFO at a semiconductor company. I worked as a CRO or a global revenue officer at a YC fintech. And then I've spent time as a CFO come CRO at a robotic and AI company. Then I worked with a boutique investment bank. And at present, I run my own shop, Baytech Capital Partners, a tech M&A and capital raising advisory based out of Silicon Valley. And, during this, I think I've held all the roles, CEO, CRO, CFO. So what I really bring to a deal is a lot of different perspectives, a founder's perspective, an investor's perspective, a banker's perspective. And that's where I can really step into the founder's shoes and make a difference.
Yeah, that's great. Your resume itself would be so huge. So many roles and responsibilities you have done across, starting as a founder and then growing your career, becoming the India CEO. That's a distinguished career you're having. And when I read in LinkedIn that you have founded Baytech Capital Partners, that's when we again got connected. We got reconnected. So congratulations on starting the new firm, Baytech Capital Partners.
Thanks. Thank you so much, Narayana.
So I also read that you have co-authored an MIT Press, The Economics of Fintech, where you had substantially written about the startup valuation. So can you share some thoughts on how startups are valued now?
That's a wonderful question, and that's a question I get all the times. And that was also the motivation for writing those chapters in the first place, because we talk of valuation. There is the DCF, or the public market valuation, which is almost a science, right? You have a lot of known variables, revenue, growth, cost structures, and So you do a DCF, typically you do a valuation, whereas valuing a startup is not a science. It's almost an art, because there are so many fuzzy things about what is really the market that the TAM that the startup is planning to service, what is the kind of money it's going to take to build the first MVP, and then what are the kind of cost structures that it will have, what are the kind of different profit margins, from gross profit to from contribution margins to gross profit to EBITDAs to net profit. So there are a lot of moving parts, and you cannot predict that upfront. And actually, that's an answer that can actually take this entire episode. So for advanced users, I'll guide them to my book. They can actually read that book, which has all these details and an example of applying those techniques. But in a nutshell, as I said, it's a startup can raise $10 million for Series A, or it can raise $100 million, or it can raise $500 million. This is all a factor of how much does it cost to build that startup. So if it's a foundational LLM that's building a model and is going to buy a lot of GPUs, it's probably going to use hundreds of millions of dollars to build its first MVP. Whereas if it's a SaaS product, it's probably going to put together its first product for maybe relatively smaller amount, like $2 to $5 million, before it validates its MVP. So really, startup valuation is like an art, and a number of variables that go in, and that's why there's no one answer or a way of calculating the valuation of startup.
Great. So there'll be multiple metrics. You'll be, as an investment banker, you'll be looking into multiple metrics for valuing the startups. So that's what I understood.
Yes, and somewhere, of course, you look at comparables. They are, you look at similar startups in different industries. So as I said, there's a number of variables but we also use comparables in public markets. But even before we come to that, there are a lot of moving parts, as I explained. Which make it much more complex than valuing a public market or cash flow, regular predictable cash flow company.
Great. So, my next question would be in your opinion, what should a startup founder do to prepare for an exit or for a strategic transaction, and when they should start preparing for it?
Oh, that's again, a wonderful question. Really, that's something I keep talking to founders, investors all the time. So there's a number of things that go into a successful transaction. I think at the top of it all, I would put in a compelling storyline. You need to have a compelling storyline that knits together all that the startup is doing, how it fits into the larger ecosystem, the kind of problems it's solving, the kind of value it's creating, and how that value could be distributed between the startup and the consumer. So that narrative is so important. I've had a number of situations where some such promising founders have come to me asking for help, and they have some real great technology which is solving a big problem for the user. But when you look at their pitch deck, you realize either it's too complex, it's too technical, or it's too long, and there is no coherent story. So I would say storytelling is really at the top of whenever you're either raising capital or looking for an exit. That what's really your story, and that's really the hood. And under the hood, there's a number of things. I would say having clean, audited or checked financials is the next most important thing. That your financials are in good shape. There's a great chart of accounts, and there are logical line items that have been classified based on the business of the company, which again, every P&L balance sheet also tells investors or buyers the story that how the business is being run. And if you don't have that in order, it just doesn't it doesn't support the story, even if you have a great story. And then, of course, you need to have metrics. How do you run the business? What is your North Star metric? How does it kind of come down to each of the department business groups, and how does it integrate with their tasks? So everyone should be working symbiotically towards the same North Star metric, so that all the pieces are working in sync. And then, of course, creating data rooms. So many times I've seen companies struggling to put together information when there's a deal, and something's missed out, or you share wrong information or multiple documents. So keeping a data room ready at all times, at least every quarter, I think that's another thing that helps preparing for an exit or a strategic capital raise. And then finally, compliance. There should be no red flags on compliance and governance, because these things, even if everything else is right, and there are governance red flags, that would definitely put off potential investors and buyers. So yeah, this is really a list of things, and I've seen so many times investors walking into a transaction, buyers walking into a transaction, and some of these things derailing it. So yeah, I would say that's really the mix of things that founders need to be prepared for, well ahead of thinking of an exit or a capital raise.
Definitely. Most of the founders may not be even knowing how to do it. And that's where like the bankers and the advisories like you and Baytech Capital Partners will be pitching in. I'm pretty sure about that. So thanks for that answer. So the next is like many of my viewers, I get a lot of messages related to AI. Like they want me to ask to my guest on like how is AI changing the way M&A and the capital raising processes are run today. So what's your thought on that?
Oh, that is the best thing that has happened, I would say, in a lot of industries. AI is really transforming the way things are done in all industries. It's making things faster, better, cheaper. So investment banking, capital raising, M&A advisory is no different. Some of the things, I can clearly see the impact is, basically researching a company. I mean, it could take some of the analysts a whole week work to research and put together the early note. Whenever we engage with the firm, we do a lot of research to understand their background, their competitors, financial metrics, a value chain, and that has become so simpler with all the AI access. That you can actually do a good report in maybe 2 days. A good analyst can actually put it together possibly in one day. So that has really got sped up. Mapping of buyers has got sped up. Putting together databases of investors has become easy. And then if you look at AI, where they are integrated with platforms like yours, API integration, that just super speeds up, and you can really put together all this information, which in the past used to take so much time to let's say I was running a list. I was trying to add it on a Tracxn platform to get founder details, and then it needs to have the website of the company. I think that's a matching key or something. So one of my analysts just threw it in one of the LLMs, and it populated all those websites in probably less than a minute. And in the past it would take so much time. It even pulled down the names of CEOs and CFOs. Of course, not everything was correct, but it just saves so much time if you're working on a list of 100 plus companies. And then of course you cannot rely on it. I mean, AI is not yet 100% foolproof, so there are errors. So what we say is it gives you a great starting point, which is 50, 60, 70%. And then you have to obviously put human in the loop, which validates and verifies. But I would say in a nutshell, the whole process of preparing, putting together lists, creating buyer or investor lists, and preparing all this preparation, that has really become a lot faster and better with AI, and therefore analysts and bankers can spend more time on building a compelling storyline, building negotiations, focusing on building strong negotiation points and other stuff, so they can focus on the more strategic stuff. than really doing all the legwork of putting together data and information.
Great insights, Mr. Nirvikar. So that will lead to my next question. How does a platform like Tracxn help you in delivering better results for founders and investors? So what's your thought on that?
Well, of course, we survive due to platforms like Tracxn. Again, as I said, the early research. If there's any company that we want to work with, or someone approaches us, that's our first port of call. We look it up. It has really such exhaustive information in terms of who are the founders, their backgrounds, the industry, competitors, investors, cap tables, and these days, you've started giving some of those value-added things like who could be a potential investor or a buyer. I'm not saying that that's it's not as easy, but it gives us a great starting point. Some of these lists. So as I said, you are also using AI at the back. So this is again going back to the use of AI, and more and more platforms are integrating AI. So this just makes things faster, better, easier. In the past, we would have to go through list by list, and then one list, and pivot tables, and manual screening and cleaning up. But platforms like yours just help us get to finish this whole task much faster, better, and then focus on execution.
Great. So, this is out of my personal interest, I'm asking this question. So, you have been a CEO, you have been in top positions in top banks, you have been in great career. And what led you to start, I would say, a startup, or in the starting stage, like Baytech Capital Partners, where you have to go to the ground and then start from the ground? So, what is the motivation behind that? So, when did you think that, okay, now it's time for me to start something of my own? I just want to know that.
Right. But that's again a great question, and I think something that's very close to my heart. And so I have while I have worked with bigger corporations in my life, I've always built new businesses from scratch. For all the large Fortune 500 companies. So I kind of by my DNA, I love building new businesses. I love building startups. I have earlier also started started a company way back where I was building a tech vacation rental marketplace in India, and I have invested in startups. So I like building new businesses. I like founders who are ambitious, who are really taking risks, who are really smart, and have amazing amount of knowledge. So I've always wanted to work closer with these founders and help them raise capital, help them get exits, really the payday all for all the hard work they do. And I realized that when I work with bigger firms, bigger firms have their own boxes, the kind of their own thresholds on, they will not allow you to work with smaller companies, and you have to fit it into a box that bigger firms give you. So I was feeling for the last few years that I want to put my money where my mouth is. I want to work with startups that I think are credible, who are doing a fantastic job, and where I believe I can add value and support them. So that's when I thought that I need to be on my own, which gives me a lot of flexibility to interact with a lot of smaller companies and founders, and not being stuck with with the regulations or rules of larger firms, which have in the past made me drop a lot of deals. So really, in a nutshell, the freedom to work with a lot many more founders of relatively smaller companies, where I think I can really add a lot of value. So that was really one of my biggest motivations to start on my own.
Great. That's great, Nirvikar. So thanks a lot for joining us today. Your deep insights and your global experience across leading institutions, and your perspectives on how founders can navigate growth, capital, and exits have been truly invaluable. So it has been an absolute pleasure having you with us. And for our listeners, you can check the comment, and I'll give you the link to the book in MID Press. So like you can click on that and you can read MID Press, The Economics of Fintech, which is co-authored by Mr. Nirvikar Jain. So thank you for tuning in. Stay connected for more conversation with the industrial leaders. Until next time, take care. Thank you.
Thank you, Narayan. It's been a pleasure for me also to be on this episode. Thank you so much once again for inviting me.
Thank you. Thank you. Have a good day, Nirvikar.
You too.